Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive for Friday, March 7th, 2025, covering market moves in indexes, sectors, stocks, and global markets. Kicking things off, I'm Max Profit. Major indexes experienced significant declines this week. The Nasdaq Composite Index fell 651.5 points to 18,196.22, showing very strong downward volatility. The Russell 2000 Index declined 4%, marking 3 consecutive down weeks. The S&P 400 Mid-Cap Index has closed lower for 6 straight weeks. Market breadth shows significant weakness. The Nasdaq Composite had particularly poor participation with 2,362 declining stocks versus just 814 advancing. The Russell 2000 showed similar weakness, with decliners outpacing advancers by more than 3 to 1. Weekly returns highlight broad market weakness. The Russell 2000 led declines, dropping 4%. The Nasdaq Composite and S&P 400 Midcap both fell 3.4%, while the S&P 500 lost 3%. Looking at 10-year performance, the Nasdaq Composite leads with a 139% annual rate of return. The S&P 500 and Dow 30 both delivered around 91% annually, while the Russell 2000 lagged with a 55% annual return.
Checking out best and worst performing equities, I'm Penny Stock. Visionary led gainers, surging 317% to close at 6.5. BitOrigin followed with a 241% rise despite hitting new lows. AbleView climbed 165% amid strong positive momentum. Weekly returns show Visionary leading with a 317% gain, averaging 46% daily returns. BitOrigin and AbleView followed with weekly returns of 241% and 165% respectively. Year-to-date, Visionary maintains strong performance with 148% returns. Looking at annual performance, Visionary shows a 127% one-year return. BitOrigin and Plus Therapeutics show significant long-term declines, with Plus Therapeutics down nearly 100% over 10 years. Among large caps, Moderna led with a 15% gain despite hitting new yearly lows. FMC and Huntington Ingalls Industries followed with gains of 12% each. Jack Henry & Associates hit new yearly highs, up 10%. Weekly returns show Moderna leading large caps with 15% gains. FMC and Huntington Ingalls posted strong returns around 12%. Year-to-date, Jack Henry leads with 9% returns, while Moderna lags at -14%. Long-term performance shows Jack Henry leading with 188% 10-year returns, averaging 11% annually. Huntington Ingalls and Dollar General show modest 10-year gains, while Moderna and FMC reflect significant declines. Among decliners, Aureus Greenway plunged 87% to 0.70. NVNI Group dropped 74% in its 5th straight down week. Pico Sila and Cutera both hit new all-time lows, falling 73% each. Weekly metrics show Aureus Greenway with the steepest decline at -87%, averaging -26% daily. NVNI Group and Pico Sila followed with weekly losses over 70%. Year-to-date, Starbucks Group shows the largest decline at -98%. Small cap stocks faced severe pressure this week. Aureus Greenway plunged 87.2% to 70 cents, hitting a new all-time low. NVNI Group dropped 73.6% to 27 cents, marking its 5th consecutive down week. Pico Sila and Cutera both hit new lows, falling 72.9% and 72.6% respectively. Among large caps, Hewlett-Packard Enterprise led declines. dropping 20.1% to 15.81, hitting a one-year low after 3 weeks of losses. NRG Energy fell 16.6% amid high volatility. Constellation Energy declined 15.1%, while KKR and Western Digital each lost around 15%. Looking at daily returns, Hewlett-Packard Enterprise averaged a 4.3% daily decline this week and is down 26% year-to-date. NRG Energy and Constellation Energy both averaged daily losses over 3%, while KKR and Western Digital showed similar downward momentum. On longer timeframes, Constellation Energy shows the strongest 3-year performance with a 60% annual rate of return. Despite recent weakness, Western Digital has struggled over the past decade with a -6% annual rate of return. Hewlett-Packard Enterprise is essentially flat over 3 years, with just a 0.08% annual return.
And now on to U.S. sector performance. Healthcare shows strength with a strong positive trend, closing up at 1,737.29 for 3 consecutive weeks. Consumer defensive reached a new all-time high despite closing down at 904.90. Market breadth shows significant weakness across sectors. Healthcare saw 267 advances versus 809 declines, while basic materials recorded just 56 advances against 148 declines. Real estate showed perfect balance with 115 advances and declines. Year-to-date returns show healthcare leading with an 8.26% gain. Consumer defensive and basic materials follow with 6% and 4.12% returns respectively. Industrials trails with a modest 1.67% increase. Long-term performance shows healthcare leading with a 7.73% average annual return over 10 years. Industrials follows at 8.89%, while real estate lags with a 3.65% 10-year annual return. In healthcare stocks, Moderna surged 15% despite hitting a new one-year low. Molina Healthcare gained 8.7% amid strong upward volatility. HCA Healthcare advanced 7.7% to 330.15. Year-to-date returns show Molina Healthcare leading with a 12.47% gain, followed by HCA Healthcare at 10%. Moderna and Charles River Laboratories both show negative returns for the period. 10-year performance reveals Molina Healthcare with an impressive 182% annual return. HCA Healthcare follows at 163%. Biogen shows negative returns across all time frames. Among underperforming sectors, financial services led declines, falling 5.9%. Consumer cyclical dropped 5.4% with strong downward volatility. Energy showed a very strong negative trend, declining 3.7%. On a challenging week for sectors, financial services declined 5.9%, with bearish market breadth showing 501 declines versus 117 advances. Consumer cyclical fell 5.4%, experiencing strong downward volatility with 3 consecutive down weeks. Weekly returns show significant declines across these sectors. Financial services posted a -5.9% weekly return, while consumer cyclical recorded -5.4%. Energy and technology also struggled with notable negative returns. Looking at longer-term performance, technology maintains strong 10-year annual returns of 19.7% despite recent weakness. Financial services shows resilience with 9.6% annual returns over the same period, while energy lags at 1.7%. Financial services stocks face substantial pressure. KKR and led declines, dropping 14.9% with strong downward volatility. Discover Financial Services and Capital One. Financial followed with losses of 14.1% and 13.6% respectively. Year-to-date performance shows significant pressure on KKR, and with a minus 22.1% return. Apollo Global Management has declined minus 19.8%, while Discover Financial and Capital One show more modest year-to-date losses. Despite recent weakness, long-term performance remains strong for several firms. Apollo Global Management and KKR and both show impressive 10-year annual returns of 19.5% and 17.1% respectively. Citigroup lags with 2.9% annual returns over the same period. Thanks for watching. I'm Max Profit, along with my AI co-hosts Penny Stock and Liquidity. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.